The way we measure sentiment, the way we think about sentiment is we're just looking in aggregate at scale, totally democratic here. Everyone's voice is the same, harnessing that view from online forums and where people are gathering online so we can actually measure it, put it through an AI or a natural language processing model, and then measure that sentiment. And then what is that sentiment, right? Sentiment to us, it's really a factor. It's a way of organizing a group of stocks based on some factor, and traditional factors might be size or growth or value or momentum. And here we can do that by sentiment. We've been doing it for a long time now, Buzz. It's been almost 10 years since our index went live. And we can say that this group of stocks is the collective representation of the broader community's most positive view. I think a term I used in the last time we spoke, Ed, was it's the collective buy list, right? And it doesn't mean that they all share factors that we're familiar with.
Welcome to another episode of Trends with Benefits. My guest today is Jamie Y, CEO of Periscope Capital and the architect of the Buzz Index. Jamie, welcome back to Trends with Benefits. I think the last time you were on was 2021.
Yeah, not much has changed since then.
Yeah, right.
It's great to be back. I'm really looking forward to this conversation because quite a lot has changed and lots to discuss.
And lots of things that I think your work tends to pick up and the Buzz Index tends to pick up as well, just in terms of market dynamics. And I think one of the reasons why I wanted to revisit this is not only just the performance of the Buzz Index year to date, which is relative to the S&P. We're recording this right now, mid-August 2025. The index is up like 30-something%, and S&P is up 10%. Just to give you a perspective, obviously that comes with a lot of caveats and of risks in different time periods. So just keep that in mind if you're listening. But I think retail investors are back. And, I hear a lot of pundits on the TV news and financial news talking about meme stocks, but I think you might have a different term for it. And at least when we're talking, we're not going to talk about meme stocks. We're going to talk about sentiment. But I think that a lot of the stuff that you track is extremely insightful and valuable information. So I'm really looking forward to having that discussion.
Yeah, thanks. Likewise, a lot of the stocks we're going to talk about today, talk about dynamic or thematic. We weren't on anyone's radar in 2021. The last time we spoke, they might not have even been publicly traded companies. So what's really driving performance recently in the Buzz Index? What stocks are they? Why did they come into the index? How did they make it into the index? And what kind of themes are they picking up on that didn't exist? That is just really representative now more than ever of how dynamic this index can be, and why I'm excited to talk about it today.
Awesome. We haven't done this format before. What I'm about to do, I'm going to revisit past trend or fads before we jump into the main thing, and maybe there's something there that'll lend itself to a segue into talking about the rest of everything. And let's see how this goes. Do you remember your trend or fad questions from 2021?
I cheated and went back and listened to our chat. So I remember them. Yes, I do have a good memory of them now. But let's revisit because it's fun.
I'm going to start with micro influencers, which you said was a trend. I think that's probably holding up, right? These influencers on social.
Yeah, I think that's the bigger trend there is that social hasn't gone away, right? In 2021, it's COVID, everyone was home, everyone was online. We were talking about how there was this explosion of conversation online of individual investors, right, where it'd been growing slowly. And then all of a sudden we had this big step up that stayed pretty consistent for the last 4 or 5 years. I think that's the biggest and most interesting takeaway is even as day to day, COVID's not a thing. We're all back to work. Life is back to normal, but the engagement has remained online. The activity of the retail investor, the investment activity has stayed really, really elevated. And so that's definitely a trend that stayed.
Awesome. Great to bring it back to the main topic. Thank you very much for that. A fun one was shareable e-scooters. You said it was hopeful fad.
I got that wrong. And I listened back to myself thinking, talking about, it concerned me the lack of safety equipment. Right? I remember saying, there's no helmets that come with these scooters. That can't be a good long-term trend. And the more I travel, the more I go around the world, the more you see these scooters everywhere. And to this day, none of them come with a helmet. So be safe out there if you're renting the day scooters.
I thought that was funny that that was your concern. My concern was I just felt like they look like litter all over the place, all over the sidewalks.
They do seem to be city dependent. I'm here in Toronto, and we do not have a big e-scooter society up here, right? You just don't see them everywhere. But recently I was in Washington and they're everywhere, right? And you hop on a scooter and you just go around. So some cities, they seem to adapt a little more to it than others.
The other was thematic investing trend.
Definitely here to stay, right? There's no question about that. I think we talked about back in 2021 how you really have more arrows in your quiver as an investor today, and that you can isolate different themes. And I think that's still an important part of people's portfolio construction today. And what we're going to be talking about today, the thematic nature of buzz, it's not a theme, it's a dynamic theme. Really, you get themes that come in and out of this index, but the concept of themes and the concept of themes and their linkage to sentiment and driving asset prices is still very much a thing today as it was 4 or 5 years ago.
And that would have been an awesome segue to the next segment, but I still have one more trend I had to follow, which I wanted to talk about, which was virtual conferences. It was funny because you said trend 100%.
I think so. We're still here talking virtually.
Really?
Yeah, aren't we?
Well, this is like, okay, I'm thinking like big conferences that replace the full day kind of thing.
And nothing beats in-person interaction. And thank goodness we're back to that kind of reality where we can do that. But where it's not always practical, we still use Zoom an awful lot. We're still on these kinds of formats. And it's, the traditional conference call of yesteryear. If anyone remembers what that was, I do. We don't do that. So we get to see each other in person, which I think is a net benefit for us. But nothing beats in-person interaction.
All right, I'll give you that. So that's what,
okay.
3 out of 4? Awesome.
We'll take it. That's a decent batting average.
That's great. When we were talking just earlier, you mentioned online collaboration, part of the whole social thing that's still around. Are you finding that there is an increasing level of online collaboration, particularly when it comes to sharing ideas around stocks?
Maybe not increasing, but definitely remains elevated, right? So where we had that big step up in COVID, it's held that level of conversation over the last 4 years. That's a surprise, I think, maybe for us, maybe for most people, right? You'd think as we get back to our day-to-day routines, go back to the office, there's naturally going to be less engagement online. And that hasn't been the case at all. So I think the takeaway there is people found value in that level of engagement. And where, like anything else in the world, when you find some value in it, you continue doing it. And that could be a product or an experience. So we've seen really that elevated level of conversation sustain over the last 4 years, which is great for insights for new themes and emerging themes for us.
Yeah, and talking about valuable, you're finding some valuable insights for investors from those trends and those discussions online, which we refer to as sentiment. Can you talk a little bit about what we mean when we talk about sentiment? Because I think there's kind of a technical analysis definition, perhaps there's a factor definition. How do you define what sentiment is?
The way we measure sentiment, the way we think about sentiment, is we're just looking in aggregate at scale, totally democratic here. Everyone's voice is the same. Harnessing that view from online forums and where people are gathering online so we can actually measure it, put it through an AI or a natural language processing model, and then measure that sentiment. And then what is that sentiment, right? Sentiment to us, it's really a factor. It's a way of organizing a group of stocks based on some factor, and traditional factors might be size or growth or value or momentum. And here we can do that by sentiment. We've been doing it for a long time now, Buzz. It's been almost 10 years since our index went live. And we can say that this group of stocks is the collective representation of the broader community's most positive view. I think a term I used in the last time we spoke, Ed, was it's the collective buy list, right? And it doesn't mean that they all share factors that we're familiar with. It's not momentum. We've seen that now. We can measure that over the last 10 years, compare what the Buzz index does compared to a traditional momentum index. Very different names in there, very different types of characteristics. And that's all the reasons why people could be positive on a stock. And it's not just because it's a momentum stock. You see some value names there, some contrarian names there, some names that are, just churning through maybe a new change in their management or, going through some type of corporate action where all of a sudden people could become constructive and positive about it. So this idea of what sentiment is, which is, in my mind, a factor and an important factor that people can now use just like all the other thematic factors that they can have in their portfolio. And that factor happens to be a dynamic thematic factor, as opposed to something that's more static, like always measuring for value or always measuring for some kind of other theme that you might want to represent in a portfolio of stocks.
So you're saying it changes kind of depending on what the collective is talking about.
Absolutely, it changes. And we can now go back and see those changes over time and, how different the index might look today versus 5 years ago versus 10 years ago.
All right. So we'll talk a little bit about that. Back in 21, GameStop was the hot meme stock of the day. I don't think it was initially in the Buzz Index, right? Not until later on. I forget when it actually came in.
Yeah, we can find that out pretty quickly here. But when we think about GameStop, it's a really interesting test case for Buzz, right? And even the whole concept of what is, a meme stock, right? Because GameStop is still around today. It's still in the Buzz Index. And I don't know, is it a meme stock or not? And so I think what Buzz does and tries to have these kind of guardrails around its index is to prevent around some of the really small cap meme activity that you might see in the market, right? Which is, a micro cap company, all of a sudden having this big spike and then it goes away, and there could be different drivers of that. Those types of names are generally not going to be found in the Buzz Index because there's a core element in the index construction that says, there's two ways a name can be eligible for inclusion in the Buzz Index. The first and most important is it has to have a minimum market cap of at least $5 billion. So the Buzz Index is meant to represent large cap equity sentiment. And we define large cap as a company that would have a 5 billion or higher market cap. So a lot of these companies or stocks that might fall into that meme category don't initially appear in Buzz simply because they don't qualify from a market cap perspective. You need to have a sustained level of $5 billion market cap for inclusion. The other thing that you need to have is a sustained level of conversation in the broader online community. And so, at a high level, the way we think about that in the index construction is we look back over the last year, we look at the level of conversation, and we look for a consistency and breadth of that conversation. So it needs to be lots of people talking about the stock pretty consistently, not just because it has a moment in the sun or, it has short-term meme status or maybe even a single earnings announcement or a corporate activity that just generates a lot of conversation and then fizzles away. When you see a lot of people talking about a stock for a long time and it can sustain a market value, that's a company, right? As opposed to necessarily a meme. And so while we've seen some companies briefly, maybe AMC would be an example of that, sort of hit that 5 billion market cap and then go away. You don't get a lot of those very small meme stock activities sustained in the index. GameStop is something completely unique. It still is a real operating business. It has lots of volatility. It's linked to crypto a little bit now. It's got all of these things happening and people talk about it and they can be positive about it or not. But it's certainly the one stock that maybe kicked all of this debate on back in 2021, but it's still in the index today.
It's still around. Yeah. I mean, you mentioned the crypto angle, which I think they took a hard pivot in June or July towards becoming kind of like this Treasury, this Bitcoin Treasury company, one of those companies that own just a boatload of crypto on their balance sheet. I don't know. Did you notice a change or a bump in a certain type of sentiment for GameStop?
We noticed the conversation around it. If I look at GameStop, it, just pulling up the data here, it first came into the Buzz Index back in April of 21. It's been in and out of the index, but mostly in the index and mostly at a near max weight. So to the extent that the community at large has been positive on GameStop since 2021. Crypto could be another reason for them to be positive about it. But we have this weighting mechanism. If you recall, the way the index is constructed, we look at the eligible universe of stocks, those ones that have a greater than 5 billion market cap, those that have that minimum level of conversation. We create that eligible universe each quarter. It's typically 250 to 400 stocks that will qualify. And then we'll sort that eligible index each month by sentiment, right? So we'll score all the sentiment, highest sentiment at the top 75 make the index, but we weight the index by sentiment, but we cap the weight at 3%. So to the extent that something would have a greater than 3% weight, we cap it down to 3%, distribute that excess throughout the rest of the index. GameStop has been one of those stocks that the broader community since 2021 has generally been positive enough upon that it's been a near max at or near max weight since then.
How do you measure sentiment? I mean, is it what people say, like they're positive on a stock or negative on a stock? I think you also look at emojis.
Yeah, well, emojis are part of the conversation. When we first started this journey over 10 years ago, measuring sentiment, we wanted to focus on just individuals' conversations and thoughts as it related to the stock, as opposed to also the experience around that company. So think of Disney as an example. You could have lots of people online talking, in TripAdvisor reviews about their experience at a Disney theme park. We ignore all that. We're not thinking about brand sentiment here. We're really focused on individual posts where people are saying something about Disney stock and then using natural language processing, which is this subset of AI, if you want to think about it that way, to actually help us determine if that post is positive, neutral, or negative with respect to the prospects for that stock. And then we just aggregate all of those posts from anywhere we can find them to get a collective view of the investment perspectives from the community.
Got it. I'm curious, kind of given, one of the major themes over the last year or two is AI and the things like ChatGPT of that sort. Is that coming into play into anything that you do today? Is it changing any of your processes or?
Well, it impacts it a lot, depending from, what's in the index versus the processes as well. So, from the plumbing of how we create the index, certainly the advancements of AI related tools and the ones everyone would be familiar with are large language models or ChatGPT, the industry benchmark maybe in that regard. Certainly those models are unbelievable. We had to spend a lot of time, back in the early days building and training models to try and, read posts and understand sentiment. And then more importantly, train those models to understand the nuance and sarcasm and all the ways that we collectively speak and as humans understand, but might be difficult for a model to understand. You mentioned emojis. Emojis were a big part of that in 2014 when it came to finance related discussion. Not a lot of people used emojis, right? But then as time went on, everyone uses emoji in their day-to-day conversation. Emojis become part of the financial conversation. You'll find maybe specific use case emojis in finance, like rocket ships, right, are common when people are talking about stocks, much more so than we're talking about brand experiences. We're less likely to use a rocket ship to describe that. So you have to train the model to do that. And of course, the LLMs of today do an even better job than you could have ever done, built a model 10 years ago. That's just a natural progression. And that's certainly a technology we look at here in terms of making sure that when we're analyzing posts, we're getting the sentiment measured correctly.
How are you ensuring you're capturing sentiment from humans? Or does it matter? As opposed to say bots or something?
There's a couple of things that we do in our index creation to avoid or try and minimize the impact that bots may have. And this has been a question since we launched the index, right? Can a bad actor or a bot influence sentiment? And there's a couple of ways. They could do it purposefully because they might be trying to have an impact on the stock price, or it just could be noise from bot activity in the marketplace. This post that we do when we actually, the posts that are included in measuring sentiment for the index go through a pretty rigorous filtering mechanism at Buzz. And so when we're doing that, part of that is to eliminate bots and a lot of bot activity that you might see online, especially around large cap equities, is generally neutral in its sentiment. So it gets screened out. So you can think of things like an earnings report or a stock that's, trading a certain way above or below its 50-day or 200-day moving average. A lot of bots repost that with links to other sites, trying to drive traffic, just as a way of creating noise on the internet to get people's attentions. But it's not really independent thought, and it doesn't really come with sentiment. And so those can be relatively easily identified and screened out within sort of our process of, which posts are relevant for the sentiment scores. At a different level, when we think about maybe bad actor bots or even individuals behind those that are trying to influence sentiment, this is something we've talked about for a long time, which is it doesn't typically happen on large scale US equities because they're so big and liquid. It would be very difficult for the community to kind of be influenced by a bot-like behavior. If you're a bad actor, you're trying to influence a stock price, and no different than, the old pump and dump cold calling rooms of the 1970s and 1980s. The kinds of stocks that those bad actors would tend to look towards would be really thinly traded microcap stocks because their activities might be able to actually influence that stock price because they're so thinly traded. So we don't see a lot of that. Even a lot of the online forums that invite people to talk about stocks, they're highly incentivized to keep bots off their platform so they have a good user experience. So everyone in the ecosystem has in one way or another a motivation to keep bots and bad actors away. We certainly try and filter for that out as we identify the relevant sentiment posts for our models. And I generally don't think it's as big an issue as a lot of people maybe romanticize that, it's possible that it could happen. We see more noise than bad actors.
How are people, or let's say, how are investors? Regular investors might track your data via the Buzz Index and associated ETF, but this kind of data, sentiment data, how is this being used by, say, professional investors, hedge fund investors, things of that sort?
I think it depends on the approach. I would say, when we started this, it was largely something that was looked at as how could this be relevant or silly, or why do I care about the individual investor? And I think today there's many service providers that might be trying to sell sentiment data to hedge funds, or hedge funds just, modeling it on their own. It depends on their use case, right? There could be high frequency hedge funds that might care on, second by second, minute by minute changes in sentiment and try and take a really active approach to that. You could see fundamental equity managers using sentiment related data as another data point for them in their research process, right? So it's, not just about company fundamentals, but also using AI to help analyze what company management might be saying, reading transcripts, complementing that with sentiment, understanding that individual investors really are a dynamic part of the market today. So it's a relevant data point. So I think everyone can use it, and it's almost table stakes information today, right? And we talked about this a little bit, I think, back in 2021, which is just having access to the raw data set doesn't give you an answer necessarily. It just gives you some data. So, if you're a fundamental equity manager or you're a hedge fund, we all have access to historical price data, to company fundamentals, right? And we can now have access to sentiment data. It's how you use that in your process, and does it add value, and can you extract value from it? That really differentiates one approach versus another. But I would say it's more validated as part of a research process today than ever before.
This is kind of a random question. In the world of, say, alternative data sets, and now in AI and compute ability, would you go about creating this index or a sentiment index in a different way? Or could you see it being paired with a different data set? Like, say, I'm thinking like, satellite imagery of ports and things of that sort. If you were to build a total portfolio, what data sets might you look at pairing together, if any?
Yeah, I think there's value in doing that if, depending on your approach. But for us in creating the index, going back to day one, we really wanted to be simple and have it just representing sentiment. This going back to the idea of sentiment as a factor, right? So when you start, blending factors with other factors, you're now doing some kind of active portfolio management, and you have something else. And to the extent that we wanted to provide people with a window into as clean a sentiment factor on large cap US equities, that is measuring sentiment and sentiment only. So market cap doesn't influence weightings. There's no sector constraints in the index, right? It's not trying to mimic a broader market cap sector exposure or limit sector exposure. Our view was that if sentiment is very high in technology and healthcare, then let that be represented in the index. That is what sentiment is where sentiment is strongest. No different than, if value is all represented in consumer products for one reason or another, don't cap that weight. So we really wanted to keep the index almost as simple as we could. To do that, though, we also needed it to be diversified and investable, right? So the one overlay that we put into the index, which was, having this 75 name index with a 3% cap, we think that allows it to be diversified enough so that it shows just sentiment, large cap sentiment. The rebalancing of that sentiment every month is really important, especially because themes and positive sentiment names can change rather quickly. So monthly rebalancing as opposed to a quarterly rebalancing, that I wouldn't change either, especially in the last few years. We've seen a lot of different themes come in and out of the index. And so I think we can do a good job of capturing that. And then even if some of those themes recently have had amazing performance, the rebalance again is really important because it doesn't allow certain themes to become way overweight. And now you might have a theme that's dominating sentiment as opposed to sentiment dominating the theme. And so I wouldn't change the index. And I think it's important that it is just a simple representation of sentiment so people can access it and use it as they see fit in their portfolios.
Well, talking about using it in the portfolio for a regular investor, how might you approach that? Because we talked about, I might initially think that it has a fair amount of momentum or perhaps a fair amount of growth, and maybe that's where I'll stick it in that sleeve of my portfolio. But I guess it could change or vary over time. How would you start to approach the idea of portfolio inclusion?
It's a great question. I think that it's something that to the extent that you are of the view that sentiment matters in asset prices, and we are firmly of that view, there is a way to use that to express that view in the portfolio. But to your question is it price momentum or is it growth? It's neither of those things. It's a complement to those things, right? And so I think it allows you to be a little bit more dynamic. So if you think of, I can have this sentiment exposure and I can know that the types of themes it's exposed to will be dynamic and will change over time. It requires maybe a little less activity in your portfolio in terms of, do I want to stay in price momentum or do I need to shift from value to momentum? I think that kind of naturally occurs in the Buzz Index. So you have that rebalancing of exposure over time. And that's proven valuable over the last 10 years to be, helpful and dynamic in doing that. It's also a little bit of alpha, right? So, what is alpha or all the factors, the residual of all the factors? I think sentiment fell as an alpha strategy only because it couldn't be measured before, but now you can and therefore it was alpha. Well, now we can measure it, so you can still consider it part of your alpha strategy. But again, a good complement if you have long equity exposure. In my mind, in your portfolio, this is an interesting way of accessing, just a more dynamic portfolio. You look at the top holdings of Buzz and you compare that to any kind of, go find your favorite active manager or your favorite star portfolio manager or even your favorite thematic. And you'll see so many different names in that top 10, top 20 holdings that are just maybe unintuitive that a normal, an active manager would have there. And the common thread there is that they're positive sentiment names.
Well, speaking of something like unintuitive results or something like that might have come out of analysis, do you have any examples, any favorite sentiment surprises, if you will, that either where the crowd got it wildly wrong or right, or some other reason included a stock that you might not have expected?
I'll look back to some of the bigger household names that I was very surprised how right the crowd was. I'll look back at NVIDIA as a great example, right? So everyone knows NVIDIA today. NVIDIA first appeared in the Buzz Index in 2016. And what was happening then, it was really about its gaming, the gaming community, gaming stocks. And these were the chips that powered all of these gaming platforms. And then that pivoted into AI and it was early. And if you go back and look at the 2016 to, even COVID era, you'll see so many negative reviews on NVIDIA, right? It's just price is way too high. Its multiple makes no sense. Find an analyst, go on to CNBC archives. You'll see lots of people kind of speaking to that. And throughout all of those headwinds, NVIDIA was a consistent near max weight holding in Buzz. And, we're all human beings, right? Individually, we're human beings. And I remember watching that stock, split adjusted. I think it entered the index at $1.50, looking at it as it rallied and rallied and rallied and having your human emotions, you feel like, gosh, maybe these people or this analyst might be accurate. This has had a tremendous run, but the conviction that you find in the index and the community of people that are providing the inputs for the index allowed this index to stay long max weight NVIDIA throughout that last 8 or 9 years. A more recent example of that, I would say, is Palantir, right? So Palantir first entered the Buzz Index in April 2021. And again, there's been how many naysayers to that story, and look at how that stock has performed. And I think the conviction of the community allows you to stay long and kind of see through that noise. So those are two maybe more household names that the crowd has completely got it wildly right. A contrarian one was Carnival. I always come back to the Carnival example in COVID. Carnival came into the Buzz Index in April 2021. And if for those listening, you remember how you felt in that time period, nothing was ever going to reopen. COVID was still a big uncertainty, and there was no worse industry to be in than the cruise industry, where you're putting hundreds of people all together in a ship, floating them out to sea. And what does that mean for COVID? But that stock fell so far and so fast that the community started being positive on it. Classic value contrarian play. If you look at a longer term chart of Carnival, you might not be that impressed. It's certainly not showing up in any momentum indices to the upside. But when you look at Carnival's overall life to date contribution to Buzz Index returns, it's a positive number. And that's a really interesting use case and story, I think, of things that, the community can get right in terms of calling a bottom, being contrarian, having collective conviction. On the negative side, you look back at the negative contributors over time, some of the electric vehicle ones to me, there was really a lot of positive sentiment. Obviously, Tesla drives that. There was a lot of, in that COVID area, whether it's Lucid or Rivian or Nikola Motors, or the list goes on. And a lot of those companies achieve very large market caps, maybe chasing Tesla. And, what's ultimately proven to be is no one's caught Tesla, right? And so those stocks have not delivered generally on the hope that investors had, or the sentiment of that collective group back in 2021. And then GameStop, Ed, would be right there as well. So, while there's plenty of stories of things that, the collective gets right, GameStop life to date has been a modest negative contributor to Buzz Index returns. So it's held its market cap. People still are positive about it, but that stock has just had a tough time.
I mean, I guess any of that analysis is kind of time dependent, or what time frame you're looking at. Perhaps Tesla did really well for a while, and maybe it sold off. Whatever it is. I guess that's something to keep in mind, just kind of whatever time period you're considering.
Yeah, when I'm speaking to these contributions, I'm thinking, since the Buzz Index went live, this is, going back to December 2015, but absolutely right. There's been lots of volatility in the market. There's been lots of volatility in Buzz in that time period. Certainly the coming out of COVID, as interest rates rose, and, it spoke to those EV companies, that proved a very challenging period for these sentiment names. And I think that's an important thing when you think about factors as well, right? Factors don't perform in absolute terms great across every single market environment. They're not designed to be. They're designed to be the representation of the factor that they are. So there are market environments where growth does fantastic, and of course where growth doesn't do fantastic. Same goes for value. Same goes for sentiment, right? It's just about being able to isolate all of those factors. And then to the extent you want exposure as an investor to it, you have a tool in your toolkit to be able to achieve that.
Yeah, thanks for mentioning that, because I think that's important as well, just understanding the risk potential in different environments. In that period after COVID through, I think, 2023, maybe when it finally kind of bottomed out, how did it compare to the S&P 500, just kind of on a relative basis?
Certainly underperformed. Yeah, I don't have the exact numbers in front of me, but it was a very challenging period for the Buzz Index as that market normalized. And that's when you start seeing some more churn in the Buzz Index. A lot of those high-flying companies, saw their valuations fall meaningfully. But again, I think what's important coming out of that is how the index is dynamic and rebalances every month, right? So yeah, it took time for the Buzz to heal, the Buzz Index to heal, to rebalance itself. But then if you look back over the last couple of years and the names that have shown up in the index, whether it's the Rocket Labs or ASD Systems or SMCI or even Robinhood, which, first entered the index in April 2022. So we weren't talking about Robinhood the last time we spoke. You had time for those names to come in, and then we're in a different market environment now. And, absolutely those stocks have driven performance out of that trough. But you're absolutely right. It's very important to remind everyone that whether it's a thematic index or a thematic kind of investment program that you're thinking about, or even a factor-based one, those aren't strategies that perform across every single market environment, but they deliver an exposure that is very unique and very specific and allow people to access it.
I wonder, do you have a measure of overall sentiment, or overall positive sentiment, say in that period of 21 to 23, when the market was down for a variety of reasons? Did sentiment on the whole kind of change? I mean, yeah, maybe there was a lot of churn within the portfolio, but were there companies that stayed in, and even though they stayed in, perhaps because of positive sentiment, that positive sentiment was perhaps less than it had been, but still in.
So, this isn't a long, short approach within Buzz, right? And it's a great question. The level of conversation stayed very high, right? So we talked a little bit about that. So even from 2021 right through today, even as stocks waned for a couple of years, and really some of those stocks sold off significantly, the level of conversation still stayed high. And, this was a question we've had. Well, what if sentiment was negative across the entire universe? Like, what would be in the Buzz index, right? So we sort that eligible universe from most positive to least positive. If they're all negative, the least negative would be the top ranked, right? So it's always exposure to that. In the same way that you can always screen for growth, or you can always screen for size. If all the sizes are down, you're still sorting from the largest size to the lowest size, which is what the S&P 500 effectively is, right? It's just a market cap weighted index. And so the same goes for sentiment. So you will see ebbs and flows in overall levels, but the index will still deliver to you at that moment in time, its scoring mechanism of most positive to least positive stocks.
Great. Let's talk about some themes that you see playing out today. I know we've probably talked on a handful of them, but saving versus 2021, let's put that back into perspective. What certain themes are you seeing playing out today? And then perhaps we can talk about some individual stocks.
Space is back, interestingly enough, right? So, I mentioned a couple of stocks just recently that have performed unbelievably well. More recently, we saw a little of it in 4 or 5 years ago in space tourism, right? So today's space theme isn't the tourism Virgin Galactic theme. It's more of the, utility of space theme and delivering satellites and, commercializing space from that perspective. That's definitely been a theme in the market. You mentioned Bitcoin Treasury companies. We could go back to Strategy, formerly MicroStrategy, right? That stock, I'm looking back, came into the Buzz Index in July of 2021. So that is the benchmark of Bitcoin Treasury strategies. That's a theme we're seeing more and more of. Even seeing that in SPACs. We talked a little bit about SPACs in 2020, 21. Is that a theme? Was that a trend or not? I said not a trend, would be continuing. So that is very much an active part of the ecosystem again here in 2025. And that Bitcoin Treasury issuance, a lot of that is coming through the SPAC structure. So yeah, and of course, AI. AI is the biggest theme driving all of this. And whether that is the pivot from, chip manufacturing and still NVIDIA and related types of entities to companies using AI, I think that's the most important theme going forward.
I wonder if there's certain names that just kind of stand out to you, something like a Coinbase or an Oklo. Are you seeing particular trends in those names or particular level of discussion that kind of stand out to you?
Coinbase, for sure. Coinbase, let's pull that one up because I've got that data handy. When did Coinbase first come into the index? Coinbase first enters in October 2021. It has had quite varying weights in the index. I see it as low as 1%, lots of max 3% weightings. It remains in the index today. And think of the volatility of crypto through that period as well, and all the stages of, what's happened to crypto. So I think, crypto and where Bitcoin is trading and the Bitcoin treasury companies and all the Bitcoin ETFs that you are well aware of that have come to market since we last spoke are driving a lot of that behavior. And that leads to Coinbase and also Robinhood, right? Which has been the top contributor to return so far this year in the Buzz Index. Coinbase is in the, I think, 7 or 8 spot. But a lot of that is linked to the overall crypto market activity. There is, more and more, especially with the current administration and their positive disposition to all things crypto, a lot of tailwinds happening there. And I would expect Coinbase to stay. That would be a surprise if we would obviously, see Coinbase fall out of the index or sentiment change meaningfully. It seems like the environment is such that it'll continue to be a meaningful part of the index.
You've mentioned it, these treasury companies, Bitcoin treasury companies. Just what do you think about those companies? Companies that are just primarily just buying a bunch of crypto and putting them on their books. I mean, are those real companies?
It's an interesting phenomenon to understand why when you hold Bitcoin in a corporate entity, it's worth a multiple of that Bitcoin. Certainly, I understand that argument. As a derivatives individual and a hedge fund manager at our core, we ask that same question. As it relates to Buzz, most of those companies are yet to be eligible to Buzz. So I talked about some of those guardrails around the index and the 5 billion market cap threshold being one of them. And that many of those companies that have recently launched either on their own or are coming to market through some form of SPAC business combination don't achieve that kind of market cap just yet, and therefore, won't probably influence the Buzz Index all that much. Strategy, formerly MicroStrategy, is the exception to that rule, and credit to them for finding an investor base that understands their business case model, and they've been able to sustain the quote flywheel and really make a success out of it.
One of the names and one of the themes that have been really big on our radar is nuclear, and one of the names associated in that space is Oklo. Are you seeing trends? Are you seeing sentiment with regards to Oklo? And I wonder, I think they're a pre-revenue company. I don't know if they're making any profit yet, but so is the sentiment there based on hope?
I think it's linked to AI. If you think back to Oklo, who's behind Oklo, right? That was Sam Altman, and that was a SPAC. And so Oklo is relatively new into the Buzz Index. I think it's just come in this latest rebalance, if I have it right. So it's relatively new from a market cap perspective, and also that measure of time and breadth of conversation. The kind of conversation we see around that is that AI theme, that need for power to power all the chips, to deliver on the never ending demand for those resources to power the AI models. I think that's the theme that investors are picking up on. There's been a number of other companies, in that sort of small modular nuclear reactor space do really well as that theme, kind of works its way through the market. And we see it now, by Oklo being in the Buzz Index. It's not a max weight holding yet, I would caution, but it has begun its life, and certainly people are positive about it.
And you mentioned Palantir earlier, which was I find interesting because Palantir is not necessarily a consumer name, right? It's more of a kind of a government and commercial business name, isn't it?
Absolutely, right. And I think a lot of the confusion around Palantir, when you read the skeptics, it's what does this company even do, right? Because a lot of it's those government contracts may be proprietary, or they're not able to discuss, and they're certainly their management style. And if you listen to any of their quarterly conference calls, it's very unique and very casual, and they're very sure of their business model. And the stock has just been on unbelievable run since 2021. Well, that's the first time it entered the Buzz Index. It remains a core holding. It's right there in the middle of the AI theme, and it certainly has the attention of the individual investor, even if it doesn't serve the individual investor.
And you mentioned space as a theme. Company there, AST Space Mobile. What are your thoughts?
Again, it's like satellite communications, it's commercialization of space, it's success, right? I think certainly what we've seen from Elon Musk and SpaceX is the capability to reuse rockets and do that efficiently. And that helps the commercialization of all of these things. I think maybe unlike Tesla, at least within North America, some other companies are finding an ability to do the same, right? And be more efficient in their use of rockets and commercialize that business. And this year they're starting to prove it, right? And so they see successful launches, successful deployments, expanding partnerships, and the community is excited about all that.
And one that's kind of a surprise to me, Boeing. Is there positive sentiment on Boeing?
Boeing's a really interesting one for Buzz. If you look at Boeing is a little bit like Carnival, right? If you look at its longer term stock chart, you don't see momentum. You don't see anything all that exciting except for a lot of volatility. But somehow the community knows when to dial up the Boeing exposure and when to dial it down. And, from our life to date perspective, if I look at Boeing, I've got the numbers here. Boeing is the 20th best contributor since the Buzz Index launched, contributing 5% of the overall, or 5 percentage points of the overall return to the Buzz Index. So I think a really unique example of, the weighting, the timing, the contrarian aspect, the view of the collection being better than just a passive view on that stock. Boeing is one that stands out as the community gets right. And it's hard to pick that, right? And the community somehow has gotten the timing right on Boeing.
Interesting. What's one long-term trend you think investors are underestimating when it comes to technology and human behavior?
I hate to throw the AI theme out there, but it is AI in my mind. I think, if you go back, we're both old enough to remember the birth of the internet 25 to 30 years ago, especially as it related to the consumer. And there was lots of hopes and dreams of what it could accomplish. A lot of those hopes and dreams may have been overvalued in certain stocks at the time, but the reality of what the internet is today relative to our expectation 25 years ago is it's far surpassed it today in terms of how we engage with it, how our lives are lived on it, how our transactions are processed on it, et cetera. To me, AI rhymes a lot with that, right? Where certainly there may be stocks that are overvalued, that won't make it, that might try and attach themselves to an AI theme like the internet theme of 25 years ago. But I think if we look back in 25 years to where we are today, the role of AI in our lives, in healthcare, in problem solving, in advancing humanity is going to be vastly underappreciated. I think it is that important. Now, it doesn't make it easy to invest in, but just as a technology and as a change for humanity, it will be significant.
Do you think that idea is something that supports the ongoing valuation that you see in things like NVIDIA and things of that sort?
That's really tough, right? I know. And that's why I love the Buzz Index, because I'll take my conviction from the community as opposed to making that individual call myself. It's, you look back at the internet as our example and, Google then versus Google today. And sure, there were lots of people that thought Google and Amazon had silly valuations way back then, and look at them today. There'll be winners, there'll be losers. That is without doubt. Which one they will be, we will see. But the conviction, I'll stick with Buzz and, go with the community's collective conviction. I do believe, and I would say this again, go back and kind of track its performance to your favorite star PM, and you'll see just how hard it is for one person to get it right. My vote's with the collective.
Awesome. All right. You ready for Trend or Fad 2025 edition?
Let's do it.
All right.
Safety first. Okay.
Yeah. Let's get your quick thoughts on these. Private credit, trend or fad?
It's a trend, but it doesn't mean that it's more valuable than just regular credit investing. I think the trend there is that credit will be priced off of traditional bank balance sheets and just in a different place, but it'll look like regular credit at the end of the day.
Interesting.
It's not the answer to volatility.
Labubus.
I don't even know what that is.
Yeah, all right. Pass. You remember like the old Cabbage Patch fad and trend, and all these little stuffed animals that went for.
I remember Cabbage Patch Kids.
Yeah.
That's
there's something like
version?
That. Yes, I think it's today's version.
That's an easy one. Fad.
Yeah, that was an easy one. Since we were talking AI, let's do a version of this one. AI girlfriend subscriptions.
I hope that's a fad. That's a terrible outlook on humanity if we lose our human interaction and the wonderful benefits that we get from it. I think if you really want to go down that rabbit hole, when we think about a Neuralink and things like that, right? The ability of a chip in your brain to allow you to feel, like actually feel experiences and therefore not be able to differentiate between reality and being in, let's say it, the Matrix, right? I believe that will actually come to pass. And when you think and look at the Matrix, and that's a very far end view of it, but that idea of having a chip in your brain, making it so real that you cannot differentiate reality from your virtual reality, and the metasphere stuff was, step 0.1 of that, right? Like we're talking full augmented reality, then people will take that. That'll be very seductive.
Some think we are already living in the Matrix.
We may be.
And then finally, getting a request to review every product you buy or interaction you have with somebody at the check-in counter or the checkout counter.
This was a episode of, what's that TV show? It's called Dark. Oh gosh, what's this show
I know what
called?
you're talking about. Dark. What is that? Not
Black Mirror. Black Mirror.
Yeah.
That's it. And there's an episode where everything gets reviewed, right? You get reviewed. You get you have your Uber rating essentially. And then that allows for you to go to this school or live in this neighborhood. It's like a credit rating. Do I think that everything gets reviewed? I don't think so. I think that might be a fad.
I am
but
hopeful that it's a fad.
Hopeful that it's a fad. But I think the integration of everything we do into more virtual, more AI, more seamlessness, it's a wonderful time to be alive as a young entrepreneur, but it's going to be a very different. The acceleration, we're still accelerating up that curve.
What's the best way for people to learn more about you and the work that you're doing?
Investwithbuzz.com. That's the easiest way to see what's in the index. You can sign up there to receive the monthly rebalance newsletter that goes out on the third Thursday of every month. So you can keep up with changes to the index, read the index guidelines, construction methodology, and any questions, there's a way to reach out to us through that website as well.
Fantastic. Thank you, Jamie. Thanks for coming on.
Been great to catch up. Thanks, Ed.
Absolutely. And thank you for tuning in to another episode of Trends with Benefits.